So on the call, we have Ian Drew from Evoca Properties. Ian is probably one of our star candidates as far as clients. You know, he was able to raise $5.8 million in roughly 60 days from the time that we launched his ad campaign, or at least he was able to complete his $5.8 million raise and oversubscribe that. He had capital that was still wanting to get in, beyond. And so we're now doing, other campaigns, for him as he goes out there and finds new projects. And then he's continuing to build out and work within that portfolio. We have Michael Anderson. Michael has, with his companies, raised over $1 billion in equity to acquire over $7 billion worth of real estate in his career. So he has some phenomenal insights. And then we have the Loom team. The Loom is a phenomenal group. These guys are out there right now, current clients of ours. They're about, I think, 40 days into running ads with us. They're starting to collect on capital. And they also have a fair amount of people that are on the fence right now. And so this call is designed as a mastermind to talk about things that have been learned over the years and during campaigns, specifically working with leads that have come from the internet. These are new relationships that then you're moving them to essentially allocate capital to passive real estate projects. And while Ian was a Class A multifamily and Mike was doing value add multifamily, and you guys are more in the retreat space, I think many of these principles are going to relate and hold true. So I would love to just start off the conversation. I know that Sam, you had mentioned that you've gotten better over time as you've been having these conversations. Ian, you shared that originally as well when we've talked about your campaign of, things got easier as you went and as you had more conversations. So maybe let's start with Ian. What was that process, and what do you think helped you improve? And then Sam, maybe you can talk to some of the things that you've done to get better over this, first time frame. And then let's launch into questions. Andrew does have a hard stop at 2 p.m. Mountain Time.
Yeah, but you all can keep going if you want to linger a little bit. I just will have to bounce off here. So.
Yeah, and real quick, thank you, Christian, Ian, and Michael. A real pleasure, and thank you for your time. I do appreciate it.
Michael, good to see you again.
What's up, Matt?
Yeah, good to see you guys.
Yeah, sorry, I could have done better with allowing you guys to connect as a group here. So definitely say your hellos. And the only reason I'm rushing is because of that. But Andrew, if you're good with it, we'll probably just run beyond if need be. And I think this is going to be great content for you guys, for us, and for the people that we'll share this, out into the world with. So feel free to be very open, candid, because if you're thinking it, somebody else who's out there trying to raise capital right now from leads from the internet are also thinking it. So yeah, with that, Ian, maybe share about some of the things that you learned over your tenure of raising that initial $5.8 million. And then let's go from there. And then I'm sure with questions, there'll be a lot that Mike can share from his experience.
Yeah, thanks, Christian. Nice to meet everyone on the call. Look, I think when we first engaged PREI, we were at the end of our first capital raise, and it had been really problematic. So I don't think it's exaggeration to say that we were pretty desperate. We'd run out of extensions with the sellers when the leads first came in. And when I first got on calls, I reacted accordingly. I mean, I just reeked of desperation. And it I'm sure just came through to the people who were unlucky enough to speak with me in the first couple of weeks of the leads that sort of flowed through. The thing that changed everything, I think, was when I had a particularly bad call. And I remember just kind of almost speaking to myself in a dark room and saying, look, unless I really change my approach, this just isn't going to work. And the most obvious thing that I identified was I needed to calm down. I needed to kind of realize that people had signed up for a reason, that they were interested. And I really deliberately just changed my approach and tried to I think two things really started to work for me. The first was to completely change my demeanor. So I was kind of calm and kind of let them feel as if they were leading the conversation. And that didn't come easily, didn't come initially, but it took a lot of deliberate effort on my part not to just burst into my my sales spiel, but really try and set the conversation so it felt like they were running it. And then I think secondly, as time wore on, you learn to anticipate people's objections. You know, they say that you really should have an answer for every possible objection before you get on. And to be honest, in the first couple of weeks, I didn't. So people were asking questions that I simply wasn't prepared for, which in hindsight is unforgivable. But I kind of got over that over the first 2 weeks and started to feel comfortable and confident that I could start to handle people's objections. And I kind of became really fascinated with this, the whole psychology with it. Done a ton of reading, ton of research, and like you can take that as far as you want. You know, there are people out there who have a spiel at the start of the call about, you know, this kind of social contract where they say, look, you know, you're free not to do this transaction, and there's nothing wrong with that. It may not be for you, and that works for some people. And I've spoken to capital raisers who actually take it a step further and kind of say, look, you know, they might say halfway through the call, I don't think this is your transaction. I think this transaction is right for other people, but not necessarily you. And they swear by that because they say that a certain proportion of people run back and say, no, I want in, give it to me, give it to me. And I think they express it better than that. To me, that's taking it a very extreme level that I personally wouldn't do. But it's kind of an extension of the theme, which is just, you know, somehow, some way, I just had to calm myself down and listen to them far more than I was doing. I think that's the key.
You know, that actually kind of relates to Mike and I had a conversation with his brother Kent, who did a lot of their capital raising. And he had mentioned when he would start off a call, he would first connect with the person, which, Ian, we've talked about that in the past, is first getting to know them, find out what their needs are. And then he would essentially offer up and say, let me tell you everything that concerns me about this. So he was essentially addressing up front, here's the reasons why not to do this, and then transition into the actual, like, here's the reasons why you may want to. So I'm curious if that relates and maybe is similar to what you're saying.
Oh yeah, absolutely. In fact, I should have mentioned that. That was also something that I learned. You know, naturally you want to focus on and accentuate the positive, but when you do that and you come across as salesy, it just backfires. And so that's actually a great method. I'm not sure that I would necessarily. Again, that's a very individual approach and a really good one if you can pull it off. And actually, it's something that I'll have to think about after this call. But I did learn to address, you know, when people said, what about A, B, and C, to, you know, really calmly say, look, there is a risk. You've got to be comfortable with it. There is a potential issue here. You've got to get over that. No, you've got to get over that, but you've got to acknowledge it. And it is a real thing. And I think that people actually began to trust me the more that I did that. That's actually a really good point, Christian, is the more that you acknowledge that there are risks in every transaction, and you're open, and people can see that you are being open and honest with them via that line of reasoning. It is very powerful. Actually, I should have mentioned that at the beginning. That was also something that, you know, I learned to do. Whereas before I was almost argumentative at the start. Oh no, that's not an issue because completely changed my approach. You're absolutely right. Let's talk it through. It is an issue. It is a risk. This is how we've sought to mitigate it. You know, it's totally your call.
So Sam, yeah, share a little bit about your experience so far and what you think has gotten better over time, and then you know, open it up to your whole team here of where do you feel like the sticking points are now, and what can we do to help?
Thanks. It's been a challenging transition for me also, Ian and Mike, because I've worked with private equity and family offices where I had it so easy. I'd raise the money. They would be banging on my door. We'd acquire properties, we'd develop projects. And I had not, other than with my own previous companies, raised smaller segments or ticket sizes, so to speak. And these investors are, in my personal opinion, very unsophisticated. They don't even know what questions to ask. And so the same psychological process has basically happened with me, whereas we are anxious to get the round closed. I was pitching to people that didn't even know what questions to ask. And over the last month, I have philosophically and emotionally just detached myself from the deal and focused on getting to know them as human beings and kind of what they're looking for personally. And I realized that I'm almost, they want to tell me about their personal stories as much as they want to talk about the deal. And now that I get on the phone call without even mentioning what I'm offering them, and I just end up listening to them for 20 minutes, I actually get much further down the road than I did before starting with an individual pitch. Whereas in private equity, it's like, you got 30 seconds, give me the numbers or I'm hanging up on you, and we close. So that's been really helpful. And then I have not taken the route of going into listing my personal concerns about the project. But honestly, in this case, I know the project is solid, at least from the land asset and finance perspective. We just got a killer appraisal. We're pre-approved from SBA. Now that the appraisal is out and I'm starting to talk to some of my cohort, everybody's corroborating this is a great project also. It's just been tough trying to raise 100K to 250 to 5K at a pop. So it's been a little frustrating, very redeeming to hear what you had to say, Ian. So thank you. And yeah, I think it's just an evolution on my part of a different marketplace that I'm addressing, which I haven't had to deal with before. I also think that in private equity, they get back to you because their job is to close capital. They don't get paid at the end of the year. I think one of the things that's been just challenging for me personally is being a little more aggressive in follow-up and forcing that to happen because I'm not a salesman, right? I'm not a killer closer per se. I think I'm a very solid economist, good people person. But I think being a little more focused on follow-up and pushing it, which for me in the past was something that you didn't want to show that urgency to people. You actually almost wanted to be off-putting. It's like, you're lucky if you get in this deal, you got to call me. I believe in this case with this market, I've seen a lot more traction also if I'm just continuously pinging them and continuously sending out emails. It's just frankly a lot of work for 100K.
I was going to add to the thoughts sentiment. Thanks, guys, by the way, too, for all the thoughts so far. In particular, I'm curious to know what I found is that, like, in the cycle, the journey of the investor, we have done a great job creating curiosity, creating interest, getting them to lean in. They're interested. They like the deal. And then they're not coming across the finish line. So it's like that, I think, is the big question amongst, team members of my team. Is they're sitting here ripping through calls, completing calls, lots of interest, lots of good feedback. Okay. And then leading to nowhere, not actually biting the bullet. Okay. Not getting to the place of sending the wire, writing the check, filling out the investment paperwork. So I'm kind of curious to know especially from that angle of like, okay, how do you close and get these guys across the finish line, especially when a lot of them are smaller check sizes, without also, without being too pushy or closing or being too aggressive in the follow-up, as it is obviously procurement for an investment. So I think that's like the nuance that our team is experiencing right now is like, all right, we got all these people in the pipeline. They all said they're interested. They're all looking at it. None of them have said no, but none of them have finalized and said yes and actually come across the finish line. And so we're like, do we keep creating more like hard dates of like, you got it ended by here? Is it push away? I think this is some of the curiosity that we have is like, how do we get these finalized and circled?
Yeah, and I'll let Mike and Ian talk, but it brings up the point of you guys have the benefit of you have a single asset with some hard timelines in place when we were raising for an open pool fund, so to speak, then it was hard to create those hard timelines. So I think if you can use them to your advantage, you guys have a closing coming up soon, I believe, if that hasn't already went by.
Closing was on Tuesday, yeah, but we did extend and push out a bit to December 15th, just because the government shut down with the SBA note. So we're able to buy ourselves a little bit more time with that. Our current narrative and angle with this, and it has been the whole time, that our round closes October 31st. So at least in terms of our narrative for investor conversations, has been that continued of like, hey, round closes at the end of the month. And look, if you're interested and you want to get in the deal and it's purely just a liquidity piece, if you can make a commitment now and you can't get your investment until later this year, as long as you can get it into this calendar year, then we'll save you a spot. We'll honor it. If you can make a commitment now, but otherwise, for all intents and purposes, we're closing out our round at the end of this month. That's the current narrative, subject to feedback or change, but that's where we're at.
Got it. Yeah, like I said, I think there's a benefit there. So Mike, maybe you could lend some insight.
Yeah, everything I've heard is pretty much the way it does work, and I totally understand where you're at. I never did do much with family offices. I did a few deals with like funds and stuff like that, single check writers for a raise that I was doing, and regretted every one of them. Just because they had a tendency to roll the boat. But I certainly understand, your perspective, because they have to write a check or they don't get paid. And that's a different perspective than just a accredited investor that has probably another source of income and so forth, and they're just trying to invest their dollars wisely. For me, I guess the key things for me was that it took us a while to build a stable of accredited investors that we could rely on. We probably had 6,000 people that are actively engaged with us when I was at RealSource, and about 400 of them pretty much did all of the lift that we needed to close 3 or 4, acquisitions per year, and that was probably in the neighborhood of about somewhere between 75 to $100 million of capital deployed every year, pretty consistently. So I get where you're at with that. For me, when I worked with them, is that I kind of agree with Ian and also Ken's statement is that the first thing you need to do is with any of these people is embrace their concerns. And maybe the biggest concern that you should have with that is that they won't even express their concerns to you. So that has to take, a little bit of prodding and to help understand where their resonance is, and especially if it's with you as the sponsor, because no one likes to, especially when you're basically a stranger, is to question anything about your integrity or your capacities or anything else, but you have to have that discussion. And so, and it has to be on a warm and personal level. I think that works best. It's just you're not dealing. I think Samuel, you mentioned that you're not dealing with professional investors, and that's going to be clear from the get-go. So it has to be a lot more on the personal, more human level. And for me, as soon as I've got a soft commitment from an investor, I think then that gives me the permission to start the process of explaining them how to complete, their offering documents and everything else. And I just always did that at a very assumptive level. As soon as they said, yeah, I'll commit $100,000 or $200,000 offering, and you'd say, great, I'll put you down for that, and I'll be following up with you on the process of getting that capital and invested. First thing I need you to do is review the subscription agreement and the PPM, and make sure that you fully understand those, and I'll follow up and make sure you're comfortable with it. I think that kind of a touch point is I'll follow up with you and make sure that you're comfortable every step of it. I think it gives them a sense that you're not just capital, you're willing to work with them because they're probably uncomfortable with the whole process. So And then just continuing those touch points all the way through to when they write the check. I think, that was always our approach. And our approach is always, as pointed out, first explain the concern you have with the investment. You talk about how you're going to mitigate those through the investment process. Then you talk about the upside. The final feeling they're left with is that it sounds like the downside of this is not great. And they've addressed that right up front, which gives me a sense of comfort with them that they're going to participate with me in coming from a space of integrity and disclosure.
Do that today.
Pardon me?
No, that was just Nick. Keep going.
Oh, okay. So anyway, that was always our approach, and it served us well. And I really preferred working with those investors in the long term because they were truly passive. They didn't want to come and tell us how to operate. So, we had a policy toward the end. We got where we liked it so well that we wouldn't allow anybody to take more than, I think, 10-15% of it raise. Because we liked everybody more in the passive role, which allowed us to just do what we needed to do to make the project a success.
Thanks, Mike. It's really nice to hear all that, honestly. At what point are you guys moving from the personal conversations and connections into quote unquote and trying to embrace their concerns? How early in the conversation do you take that step? For example, is the first call just getting to know them, you don't even try? Or do you usually try and get into that in the first conversation before you hang up?
My opinion is, I'd like to hear Ian's take on this, but my personal opinion is that because I am a passive investor now myself. Matter of fact, most of my portfolio is in passive real estate investment. And I'm always amused at when somebody starts talking about their deal and doesn't talk about me. Me, it's like, really? Well, let me introduce you to my cat. It's not very intelligent, but I'll introduce you to you and you can explain it how bad you mean. It just took me out of the equation. So I appreciate the fact that anybody that gives me a deal is going to have to understand why would I be interested in your deal and what it is that I'm trying to accomplish. What my risk tolerance is. I'm an old man these days. My risk tolerance is completely different than when I was 30 years ago. So I'm going to be paying much closer attention to your risk management and how much leverage you're going to be carrying in the deal, and what are the risk elements of it, than somebody that's half my head, for example.
Got it.
One question that I had that I was curious to get on is, I think on the same topic of, obviously it being rather passive, LPs and investors that may or may not have as much experience when it comes to hospitality asset classes. I find that it's very rare for any of these investors to have any experience in hospitality. If they do have real estate experience, it's multifamily, shopping plazas, whatever you name it. And that's where I think a confused mind says no. And I find that most of these candidates, most of the people that we talk to, and we had the same thing even when we were working on personal relationships with the deal we put together in Mexico. When it comes to a hospitality asset class, it's just too nuanced. There's way too much going on, and there's too much that they just don't understand. That makes it hard for them to feel confident in the project because there's so many variables that just are kind of going over their head, and they're not used to seeing hospitality pro formas or asset classes. I'm curious to know, maybe Michael, if you've had any experience with that, in relating to some of these, investors, or thoughts and considerations on how we could kind of help bridge that gap.
Yeah, I think you guys are in a really interesting space. You're in a niche of a niche,
Yeah.
and that's going to be confusing to anybody. And when I thought about and I looked at your property in Mexico, and I wish that my ability to travel would have been a little bit better. But when I started out in this business, I started doing what we called a market orientation tours, and no, I was in the multifamily business, and everybody at one time probably had lived in an apartment before, so they had that experience with it. What they hadn't been experienced with is a market that was not within their local. If it was a California investment or investor, and they're investing in an Oklahoma property, they didn't really understand where their money was going, because they didn't understand Oklahoma. So what we did is we would gather up 50 of them, fly them to, they would pay for their own flights and hotels, but we'd take them to Oklahoma City and show them this is where Whirlpool's building their new manufacturing facility that's moving out of New Jersey. This is where this is where American Airlines is coming to do their maintenance facility. Show them the economics of the area. At the same time, we would take them line dancing, to Billy Bob's Bar or whatever, all the local sort of stuff. So they had this experiential connection to the city. And it was interesting is that the economic stuff was interesting to them because they could actually see it, touch it, and feel it. But what was more interesting to them is they got comfortable with the culture, and that made them a little bit more comfortable where their capital was going. They understood it. They felt connected to that place. What you guys do is highly experiential. You've got to give them a sense of what it's like, to have that experience. The best way to do it is obviously is if they were to be involved in it, but I oftentimes wondered, and I know that Sky's talking about doing this for us, is that taking people to the investment and getting to know its location and getting to know a sense of what it's like to experience that. People don't need to understand all the costs and the economics of what you guys do and how you do it. But the best way to connect to your product would be by the experience.
Yeah, and I'll add to that. That's been kind of my role with the Mexico project, that I raised about $500,000 just not knowing anything about this, and got another $500,000 that's like on the hook. And we started doing like investor retreats, and that's where Sky actually went out to Mexico, was on one of those retreats that me and Andrew kind of curated. So as I was getting involved with this whole project, that was my whole thought, was like, we gotta get people out there. And so I think that that's already kind of in our minds, and we can kind of figure out how we want to work with these investor leads to kind of facilitate and bring that mix into what we're doing in California. It's a little bit easier to get there than to Mexico for a lot of people too. So I think that's something, Sam and Andrew and I can discuss a little bit more this month for sure. And I wanted to add one thing you said, Michael, just awesome advice. Just on the closing side, I think that's like the fine line. I've been a closer for 15 years for solar and other products, and basically that's kind of my DNA. So I think Sam and I are maybe a little bit different in that, as I'm more of a closer and more assumptive, and kind of I'm going to have to kind of reverse engineer a little bit to kind of fully dial this pitch in with these, with these leads, because I've been working my warm market for most of the capital raise I've been doing. But I really like what you said, just for once they give you a soft commitment, you be assumptive, and it's like, okay, wonderful to hear that. Let's start the process. This is kind of the next couple steps. And so I just wanted to add that.
Yeah, I always, as soon as I got a soft commitment, I would say, you know what, I'm holding this spot for you, and I need to let you know that we will oversubscribe, because we did. We by intention, we always oversubscribe, so there's that sense of fear of missing out, you know, but the rest of that process then is just getting them comfortable with the process of actually closing, you know. And the way you do that is that becomes a continual touch point. You know, let me get back with you on Tuesday and let's review the, you know, after you've had a chance to review the PPM, and let's talk about any concerns you had in the PPM, or, you know, any reservations, or make sure you're comfortable with that. Same thing with the subscription agreement, you know. Okay, now here's what we need to do to set up your investor portal and get your cash transferred. You know, that process is that, I think that's where the biggest concerns come from, is that I don't know what I'm doing. You know, so you have to just, that's where you have to do the hand holding. But the fortunate thing is it gives you that continual touch point.
Yeah, a couple of things that I'll pull out of this conversation, you know, and even just relating to, I've always been in relationship-based sales, which is very much similar to raising capital. And there's always that balance of, you want to put some urgency without feeling like you need them to put in their capital, right? And so instead, it's got to be something, you know, more on their realm. So some ideas that you guys could utilize is, you could, you know, let them know, hey, we're closing out this round. I'm limited on time for being able to walk people through the process. Could we schedule a time to get on and go through the subscription agreement together and answer any questions that you have? Something of that nature is like, hey, here's the timeline. I'm limited in my ability to handhold you through this process. So let's put it on my calendar, because I want to make sure that you get the white glove treatment, if you will. And so a lot of those things you're saying without saying in the process. Another idea, because you had mentioned it, and I've been there, being and experiencing the property, I think, of course, is going to make a huge difference, but it is more challenging. It does add cost. You guys aren't necessarily local there to be there with them on every single one if they were coming every week. But one of the things you could do, just as an idea, is that could be another hard timeline of when you guys are going out there next. You could say, hey, listen, anybody that has committed capital by such and such date, we're actually inviting to come to the property. And whether they do or not, they may see that as an incentive to say, let me commit capital now, so that if I can make it, I can go out there and experience that. So if you had a, you know, you could set essentially at your own leisure a cutoff time of anybody that commits capital by such and such date is invited to come out with us when we go out for our next, you know, site tour visit, you know, whatever it is after closing. Just a few ideas I wanted to throw out there of, you know, being able to use some timelines, but also make it more about them. And then just as another point, because Sam, you had brought this up, is, you know, you're not necessarily best at the follow-up process. And I think that I'm seeing that across the board with clients, is oftentimes they'll get the initial conversation had, they'll get some initial interest, and then they don't have a process for that follow-up. And oftentimes that's where, you know, it's hard to say, you know, are you doing everything on your part to make sure that you close them? So having some sort of a process for that, I think, is important, because as Mike had mentioned, you may not even know what their concerns are for those first few calls. They might not even know what their concerns are, because this is, you know, while it's only $100,000, you know, in the big scheme of things for you, for them, that $100,000 may have taken them a decade to build up. And so they're starting to talk to people around them and ask questions of, you know, or, you know, mention things. And then other people bring up concerns, and they're not sure how to ask it of you. So as you have those next step calls, essentially a process that you take them through. And sometimes that call is, I just haven't heard from them in a week. I better touch base and see, you know, where they're at with things. But that gives you the opportunity to potentially ask those questions of, what are some of the things that would hold you back from moving forward, you know, today, or being able to get your money in before closing, you know, so on and so forth.
Yeah, I often wonder how often I should be following up with these folks. You know, and frankly, of the 100 people I've spoken with, maybe one of them have followed up with me. Right? They will not follow up. And that's, you know, new to me at least. And then, you know, I send out an email, then a text, then I make a phone call. I'm not sure how many more times I should continue calling them at the end of it, because I've never gone through this before. It's like, well, wait, I don't want to push somebody into an investment that they're not quite comfortable with. They're not giving me the opportunity to help them get comfortable with it. I wouldn't be offering this if I personally wasn't comfortable. I'm an economist. I know this is a good deal. And so, yeah, it's been interesting to kind of judge like, all right, therefore, perhaps I should come up with a methodology and a process that actually helps me weed out the candidates that I shouldn't be focusing on, such as the sales funnel concept. Because basically,
Sam.
I think I'm spinning my wheels with a lot of folks that I'm not going to get traction from anyways in the first place.
Sam, can I add to that?
Please.
I love that question, and I've done a similar actual process that I was able to kind of make a system around with my Kavaloom investors that I was raising with, and I think that framing is so important in your initial. It might be the first, it might be the second call, but I would do it like halfway through the first call once you've gotten to know them, learned about what they're interested in, learned about what they're excited about, learned about why they're even really like looking into this as an investment, and then saying a frame that could look like this. Hey, just to let you know, we're very, very busy with closing this out, so I am limited on my time. But let me tell you what's been working with other interested investors for a follow-up process, because I don't want to be chasing you or have you feel like there's any type of resistance or friction in us working together. But I am under a bit of a time frame because this is the time
And
that
that's
we're
honest also, yeah.
working on closing. So what would you think about me checking in once a week via text, and then in 10, 15 days, we have another follow-up call after you've had time to review the subscription agreement and had enough time to kind of just think through some of your questions so that we can have our next call specifically reviewing this subscription agreement to see if you're in for a soft commitment with our time frame. Does that sound good?
Well,
Love it. Thank you. And do you guys usually work at that cadence of 10 to 15 days between conversations, or are these something, timeframes that I should try and shorten?
so that was going to be one of the key things that I said is I think you could condense those timelines a lot if you set the expectation. And if you have an actual process, it's a lot easier to do that. So for example, I used to sell a $20,000 education program, right? And we knew it was a 3 to 5 exposure process before somebody made a decision. So when I was meeting for them, we had a acronym that we called a BAM fam. Always book a meeting from a meeting. Always book a meeting from a meeting, a BAM fam. So essentially, when I was inviting somebody to get on a call with me, on that call, I was booking them to come down to a live presentation. On that live presentation, I was booking them to come to a follow-up. From that follow-up, I was scheduling a phone call to find out if they were able to do the steps that were on their homework list, if you will. And I would just be upfront with them in the fact I would tell them, listen, we know that it takes 3 to 5 exposures to this before somebody even figures out if this is a right fit for them. So here's what this is going to look like. And I would essentially spell it out. First thing we'll do is we'll have, we have this conversation. So far, it already seems like you may be a good fit. So what I would like to do is have you come down and meet the team and get to understand and touch it, feel it, get a feel for what we're doing. And then, at that meeting, if everything feels good and looks good, then it would be about getting together and talking about your own personal needs, and whether this even fits in with your goals. And then you get the point. I don't have to spell the whole thing out for you. I feel like I'm rambling a little bit to make the point.
Not at all. I
think you
appreciate it.
get what I'm saying here is if you set for yourself a process and it's never going to follow the process perfectly, but if you know what that process is in your head of, listen, we usually have an initial conversation, which is more about getting to know you more than anything. Now they already know on that first call that this is their opportunity to connect with you. After that, we're usually diving into more details about the investment because I've already sent those to you from the first call, and you're going to have questions. So we're going to set that up. And then from there, usually we step to the process of actually going through the offering documents, making sure that that you understand everything there. And if everything looks good, then signing on the dotted line. And from that point forward, usually it's about 24 to 48 hours where somebody will send in a wire. Does that sound like a comfortable process for you?
Nice. Thank you.
Yeah, framing for me was my specialty with solar, and the year that I was like in the top 10 out of 7,000 reps was the year that I really perfected Oren Claff's methodology from Pitch Anything. And like my frame was so solid that it was just like second nature. And so I've kind of done a similar thing with my Kyle Bloom capital raising, and with this, as I'm just, I'm just starting calls this week off of the lead list. So, I haven't fully engaged until now, but I'm fully committed for the next 30 days and excited. And I really appreciate that, Christian. That'll be something that I do exactly like that. And yeah, when you really tell them the frame that you're setting, and then have them agree with it, and then have them really feel comfortable with that, now every time that you text them or follow up, there's going to be a comfort level there, and they're going to be excited to have you do what you said you were going to do. Because once they've agreed to it, now your frame is something that they feel great with. And I think that, like, it could be 2 days, it could be 3 days, whatever they need. And you just check in at the end of your call, like, hey, is 3 to 4 days enough time before we kind of follow up again? We are under a bit of a time crunch. And I just want to make sure that you get taken care of. And because we're for sure going to oversubscribe with this, and kind of have those assumptive statements.
The other thing you can do with that is you could find out what their concerns are and or timeline is, and then you're not setting improper presumptions, if you will, because somebody may come to you and when you lay that out for them, they'll say, well, I have to be honest with you, I'm not going to have money for the next, I'm not going to have access to my capital for the next 30 days. Well, now you're not calling them tomorrow and saying, hey, we're on a really tight timeline, can we get you in the next week?
Yep.
You already have set an expectation, so you know what your role is. So then you can say, well, how about this, let's go through all the main parts of the process, and then we can be prepared when we get to the point of time where you access your capital. Mike, we've talked about this before, where it's always the weirdest thing where an investor will just go ghost. They're just gone. But then all of a sudden they call you and they've got $750 or $1 million or whatever it is. We had this one lady that came back, and all of a sudden she had $5 million, but she hadn't talked to us for 90 days. She just stopped answering. And Mike explained to me, he's like, well, honestly, I do that to some people because when they're really pressuring me and I like the deal, but I don't have liquidity at the moment, I would rather not have those uncomfortable conversations with them until I have the capital ready to go. So,
Right.
you can find some of those things up front. But I do want to get in some of your take on this, because you moved things along so quickly in your process. What are some of the things that you had? What were those expectations? How did you set the tone for being able to move these people from brand new conversation, getting to know them, to actually committing their capital?
Look, I was just going to say, Christian, to Sam, that Sam, I come from the same background as you do, right? I come from an institutional background. And so I had exactly the same problems that
Yeah, your description is par for what I'm going through, brother.
Exactly. And Christian, to be honest with you, I'm kicking myself that I didn't organize a conversation like this, when I was going through the struggles that I had, because I've just learned
this is psychology for me, fellas. Like, this is great. I appreciate it.
Yeah, no, that was the biggest struggle I think that I had. It was getting people, because I think, as you pointed out, you're now dealing with people, this is not their day job, right? So they've got a W-2 job or whatever it is that they do, and this is kind of an adjunct to that, and it's not their first concern. So getting people disappeared, people didn't follow up when they said they would follow up. And honestly, I don't have the answers. In fact, I've learned an enormous amount listening to Christian, Matt, and Mike, and wish that I'd had that information. That was my biggest challenge. And for me, because I was frankly not experienced nor good at it, I'm not a closer, right? I was in your position, where people came back without me initiating the conversation. It was random. I would sort of probably over chase, and people would disappear for a month and then come back and say, right, I'm in. People who, you know, and I'm sure you've experienced all this, people who said, yeah, I'm super keen, would then disappear without a trace. I think what Mike, Matt, and Christian have said, I was missing the hook, I was missing the system. And since then, you know, I've done a ton of reading, but I haven't put it into practice yet. So I would definitely listen to those guys over anything that I've got to say, because I was hopeless.
What do all of you think about the October 31st closing narrative? And, you know, it's the 10th. It's not likely that the majority of interested investors are going to close in the next 20 days. I don't want to scare them off either. How might you recommend that I approach that? The reality is we're still going to be raising money after the closing date. We're just capturing the property and continuing to raise equity thereafter. To me, it sounds like perhaps, I mean, if I was in the investor's shoes, I wouldn't want to be pressured in trying to invest within 20 days. Do you think perhaps we should extend that deadline, or how would you guys suggest managing that narrative?
So when I first heard it, I think actually it's a great timeline to condense things. I think you just need to spell out what that means, right? So what is the incentive for them moving forward? Because you know that they can put money after the fact. But if you say I'm closing out this round at the end of the month, what is that special incentive that they get if they fit into that timeline? Because then there's some motivation for them to do it. So if you know, if you're asking of whether you would bump it out, if you've already been using it and stating it, I would say keep it, but make it more appealing somehow. You know, maybe some of these ideas of anybody who gets their money in, we're going to offer them, you know, the opportunity to come within the first 12 months and experience the property. I mean, I think you guys already have some of those incentives. So, you know, think of something that there is that they would get, why there's a benefit for them putting in capital now versus after the fact.
Great.
Because that also gives you an opportunity to have that conversation with somebody that says, you know, hey, I'm not going to have the, you know, the capital for the 60 days. Hey, totally fine. We can get you into, you know, a future round that has to do with the CapEx. But just to let you know, if we don't get the capital in by then, we might not get to see you at such and such event that we're doing, or, you know, whatever it is. And I, you know, if you think that it makes sense to, you know, to get it in sooner, or if there's anything that I can do to help with that, you know, let me know. I'd love to see you there.
Great. Thank you.
Yeah, I like that. And one of the things I wanted to ask is when we're talking about like oversubscribing, right? What would you say is the best verbiage to kind of say as you're helping them feel the urgency, but also helping them see the benefit of them making a soft commitment? Because personally, that's probably the way that I'll go about this, just with my experience of raising capital so far. And what I know is I like the soft commitment stage, and then as I progress more in these conversations, I'll get more confident and be able to collect. And I'm going to re-listen to this a few times because I really liked the way that you laid it out a few times in your verbiage, Christian. But yeah, how would you say that?
Are you asking me specifically or the group?
You specifically for this question.
Got it. So just repeat the main part of the question first. So essentially you're asking, how would you talk about the soft commitment?
Yeah, the soft commitment, and then oversubscribing when it comes to like the specific verbiage of how you probably lay out yourself.
So that goes into strategy. I'll share based on what I know right now, and then you guys adapt it to what you actually decide on as a team. But it's essentially what Andrew said is, hey, we're going to be closing out this first round on October 30th. And then I would say, why? So this round is specifically for the acquisition of the property. And it's not that your opportunity is not going to be there to invest with us after the fact. We're still going to continue to raise for the CapEx, and we're going to be improving operations during that process. But for anybody that commits with us now that's on this first phase, we are going to give them the opportunity to yada, yada, yada. I don't know what that is. I don't think you could, I don't know that you should necessarily tie it strictly to an in-person meeting, because there's probably a lot of these investors that aren't going to take the time
Yeah.
to get out to California. So maybe you build a two-part process. We're going to have a closing celebration via Zoom, and we're getting together at the property, or I don't have the idea built for you right now, but that's probably how I would approach it. Is I would just say, we're closing out this round. This is, that doesn't mean that you're going to lose your opportunity to invest, but if you're able to get your money in beforehand, then you're going to get access to this and this. The reason that we've designed it this way is we're coming up to the closing stage of the property, and then we're going to continue to raise for the CapEx as we are already operating the property and improving the operations in the process. And I only know that much because I was there and I spoke with Andrew, so I know that's kind of part of the plan of how it's going to work. So you guys layer that into the narrative that actually fits with the project itself.
Great. And also there's perks, I think, that I'm not sure what Andrew's thinking in terms of the second round, so to speak. But a few free nights with those that come on board early stage, et cetera, et cetera. Matt, you and Andrew and I can talk about that as well. But I like the narrative, Christian. Thank you.
Yeah, and something like that I really think is beautiful, because if they're getting, let's say, double the nights for getting their capital in early, it is such a unique property. And when I went there, I didn't want to leave. So, if you let them know like that, rather than being able to come for a night, per year, you can come for 2 nights per year just because you got your money in early, or, and maybe it's 3 nights versus 6. I don't know what the actual incentives you're offering are. But there could be some of that. And then, as you find that out, if that's not really an appealing thing to them, you could have them give the opportunity for them to trade that out, or potentially give it away to somebody as a gift, where you will host somebody on their behalf, as a really cool gift. Like, hey, I understand you're probably not going to make it out here from Beijing, but if you wanted to give this to somebody as an incentive or a gift, here's what I'll do for you to make sure it's extra special, right? Anytime you can offer where somebody feels like they're getting something that's extra special, I think there's some benefit to that. And you can also do that if they are planning on using it. If, hey, listen, when you come, if I can fit it into my schedule, I'm going to be there. Or when you come, I'm going to make sure you get a chance to meet so-and-so, on the property. They're really great about showing you where to pick the best blackberries and, those types of things. I mean, I'm just layering these little things that you might not think are very important. When somebody feels like they're getting the important and they're getting to meet somebody important, then there's a benefit to that.
Yeah. Adding to that, that's one thing that I know I'll have some pretty good juice to draw from, because I ran 2 or 3 investor retreats at the Tulum property, and me and my wife got pretty, let's say, pretty dialed in that, like, hosting of the experience. So I think just between Andrew, Sam, and myself, like, we've got a pretty solid team when it comes to creating the experience that someone could plug into. And we'll do more media and like have some video and stuff like that, where people can see what the experience would be like as we enter into phase 2. So I really love that. That's perfect. This was very helpful today. So,
and if you guys have done a really good job up front of getting to know them, it's a lot easier to layer in that perceived value. Because if somebody is going to use this for their anniversary retreat, then you let them know, hey, I'm going to make sure that your wife has her favorite champagne there. If you know that they have a kid that is coming up on a certain birthday, and they always do a one-on-one get together, vacation, for their 18th birthday, then you can layer that in and say, hey, let's get this done so that next year on Johnny's 18th birthday, we can have you guys come together and spend that time, here at the property.
Yeah, I love that.
Yeah, and I'm on site also, so anytime.
Perfect. Be easier for you to build those in then, because you know the area, all the different things. I mean, gosh, that house that we stayed on that second night, I was just really cool. Just amazing opportunities where you can make make it truly an experience for somebody. So not only are they getting the return on the capital, which was the original reason they came, but they're also having this experience that, they get to share for, years to come.
Well, thanks,
Yeah.
Christian. And hey, Michael and Ian, also, I do really appreciate your time. Thank you. It's been a big help.
You're welcome. I learned a ton as well, so I should be the one thanking you guys. Sounds
Where-
like an amazing project.
Yeah, where are you guys located, by the way?
I'm in New York.
Okay.
Mike,
And Michael, you're on mute.
but he's here in Utah as well. He's in Salt Lake City.
Oh, cool.
Yep.
Nice. I
Sorry,
grew up.
I'm in Salt Lake. Yeah.
Nice. I grew up skiing Salt Lake. You guys are in a nice place.
Yeah, I grew up skiing Salt Lake myself.
There you go. Nice. Sorry,
That
Matt, were
assumes
you
that
going
I
to say
actually
something?
grew up.
Well, people ask me often where I grew up, and I respond with, I never grew up.
Yeah. Why would you want to do that?
Right?
It's a trap.
Yeah. No percentage in that.
Oh dear.
Yeah, the only thing that I was just going to add was with the bigness of kind of the Loom vision and like the conscious community up-leveling human consciousness, like the depth of where we can dive into with people, like that's where I think the experience is so special. And when you have a connection with someone, you can kind of like share what those experiences have been. That's where I think people like see this more of as an impact fund, right? Where they really are getting more depth with their money. And that's something I talk about with every investor is like, hey, look at where impact funds are right now. Like people want their money to go somewhere that actually matters and makes a difference and is meaningful. And that's really what drew me into this group and this vision, and really caused me to switch up everything that I was doing and change my whole career to support this, So that's
Sense.
So
Well,
that's a great story. Lead with that.
Yes.
Yeah, I will. I usually do lead with it when I kind of, after getting to know them and learning everything about them, that's kind of the first thing that I say. But I'm excited after this call because I know that I'm great with connecting with people, and I'm just going to focus in on them, because once people know how much you care, they actually care about what you know.
It's true.
Yeah.
That was you were talking about framing questions. First time I'd ever contacted an investor for the first time, hopefully it was always in person, but that's not how things work anymore. It's
Right.
Based on social media and those kind of connections. But I always would thank them for showing an interest in what I was offering, what I was doing, sharing their personal information with me in the case of social media.
I like that.
But then the very next thing is that because of you taking that step and you've initiated this, let me tell you what I owe you. And it's the process of, I got to understand if this is suitable to what your dreams and desires are for making this investment. If we decide that that's the right thing to do, and then I would say what I owe you is I need to understand you better. So let's take the time to get to know you, and then we can get to know the deal and you get to know more about me.
Nice.
I always had this philosophy when I was a younger guy to always date women that were way above the attainable scale for me. And the only way you get by with that is get them talking about themselves.
That was awesome. That is an axiom right there, my friend.
Oh yeah. Oh yeah.
But I do like that a lot. Let me tell you what I owe you. Is just learning more about you and your needs as well. I want to reciprocate thanks to your interest in what I'm doing.
Yep. That was to set up the whole framing of the whole relationship. And when I say whole relationship, I mean well beyond the investment.
Right. Of course.
Several investments later.
Well, it's very important, for me, Ian, also, in private equity, they're fine. I'm talking about somebody's kid's college tuition with a lot of these investors. You know, I'm
Sure.
talking about a much higher risk profile, emotionally, personally for them, that at times is intimidating for me, you know, because I realize that that's what they're thinking about and they're counting on me to help them with food on the table and to help them with getting kids through college. And so owning that and speaking towards that directly, I'm learning today also is very important, and I appreciate it.
Okay.
I think also, and this may not necessarily help you for this transaction, but you know, should for follow-on. But the biggest takeaway from me after the first capital raise was keep the relationships going. So the work that you do in between capital raises will put you. It means everything, and that's what I didn't do prior to the first capital raise. So most of my conversations were coming in cold, and I was having to establish that relationship, all that kind of good stuff. You know, if you do the work that you're supposed to do, create that relationship so that next time you go in, you know, with that level of understanding, because as you know, when you're dealing with PEs and institutions, it's really just they look at the transaction, they look at, you know, what hat you're wearing, what institution you are.
Yeah.
It really doesn't matter whether it's Ian Drew or Billy Smith doing the talking, because they know that you're part of a team of 1,000 people. And here it's completely different, and it's all about the work that you do now and that we do now for the next one. So, you know, if nothing else, you can think, well, this is going to put me in good stead for the next one. If you choose to operate with individuals for the next one, given the fun you're having with this one.
Yeah. And last thing I want to add is I really like what Mike said about this is a niche inside of a niche.
Yeah.
And I use that, and this is how I'm going to use it. I'm going to say, hey, this is a niche inside of a niche. And what we are really building is part of the wellness, you know, community. And the wellness industry is a $1.7 trillion industry. It's about to blow up, but you're talking about, you know, hotel hospitality and a niche inside of that in a booming transformational wellness community. And this is why that would even matter. And then kind of go deeper into like the vision of why it does matter. So I really like that phrase, Michael.
That reminded me of one more question. I'm sure you guys got to go, and thank you for your time. How soon are you sending the email with all of the investment information? Is that immediate after the first call, or does that depend on how that first call goes? Because we kind of have a methodology of it's a call, get to know them, and we have a prescribed email that we send out. I feel like it's a little too objective and perhaps aggressive and just filled with investment details. I wonder sometime if I should be a little more nuanced with that pattern of communication with, you know, each individual.
I know for me to systemize things on our end with everything, I have pre-typed emails, but I'll chop stuff out of them constantly. So I try
Right.
to send it as quick as possible, mostly because my brain will forget about it otherwise. That's why we're trying to hire me an assistant that can take, you know, track that stuff and do better at, you know, those follow-up processes. But I don't see an issue with having, you know, a professionally prepared email that you can literally copy and paste.
Yeah.
It's just in certain scenarios you might chop stuff out. You know, they may not need that.
Yep, that's what I've started to do more and more.
Yeah, and for what it's worth, I did the same. So I had a standard email which I would tailor to whatever arose from the conversation. Really, really helped because they felt that it was personalized. So I would discuss whatever was discussed on the call.
Right. Great.
Yeah, and Andrew is brilliant at that, by the way. Sam is what he'll do is he has his like base email, and then
Yep.
he has like kind of a little summarized like 3-4 sentence thing where it's very personalized, recapping your conversation and what it's about, and then goes into the full email. And I've adopted that too.
Cool. Well, great. Well, hopefully we can stay in touch, guys. I'd love to have a follow-up and celebrate all of our success here in the next month as well. And thank you guys for that also.
Mm-hmm.
We're
Looking
going to
forward
hold you to that,
Sounds good, Mike.
Sam. Going to hold you to it.
Love
And
it.
Ian, it was so refreshing to hear your story. So thank you today also.
Yeah, likewise. It sounds, I mean, from what tiny little I know, it sounds like an amazing project. I'm sure you'll do brilliantly.
Well, and per Mike's comments, we've got a bunch of private equity guys interested now. They want to take the whole deal. They
Yeah.
want to get governance. They want to dilute us. We know how it's going to go.
Yeah.
It was a nice reminder to be like, you know, sometimes the smaller investors are actually more advantageous and a little more personal as well.
absolutely.
Appreciate you.
Cool.
Thank you for your time.
All right, guys. Thank you guys
So-
for joining, and we'll talk again soon.
You guys take care.
So much.
See you, everybody.
Thanks.